To get more insight into this deal, we're now joined by Patrick Murphy. He's a professor of entrepreneurship and U.S. China business relations at DePaul University in Chicago. Patrick, thanks for joining us.
Great to be here. Thank you.
Patrick, let's start off with why this deal makes sense for both parties. Let's begin with the Chicago Stock Exchange. What's in it for them?
Well, when you look at something like the Chicago Stock Exchange, you have, as you mentioned, a relatively small player in a larger sector that we could describe as being in secular decline. This is the type of thing that could, assuming it's approved by the Treasury Department, that could conceivably open up new investment opportunities for market actors that participate and invest in the Chicago Stock Exchange.
Well, given the Chicago Stock Exchange is the third smallest exchange, very low volume, why is the Chinese holding company interested?
I think it's more of a question of the model. I mean, this would be the first purchase of its kind. There have been other Chinese holding companies that buy U.S. businesses, but they haven't bought an exchange before. And when we talk about an exchange in the U.S. context, you're talking about the technologies that they've developed as a moat to protect themselves from competitors, the model that they use to trade the different financial vehicles. These are really the best in the world. And a nation like China that has an economy that's very large but is still developing can learn a lot from that kind of an asset.
Well, members of Congress, Patrick, are objecting to this deal from both sides of the aisle. What is the main source of concern?
Well, there's two different ways to look at it. From a business perspective, which is what we were just talking about, it's relatively a good deal. There are benefits for both sides. From a political perspective, it gets a little bit more complicated. Historically, the nation of China, vis-a-vis the U.S., it hasn't always been an ally. And so there are long, deeply rooted political histories that are certainly present on both sides of the aisle in Congress. And so if the constituents that these representatives are speaking for in Washington are going to be against it in large numbers, then they have to take that into account. So there is a definite political issue here. And we need to remember that we're talking about an institution that is almost definitive to the American system. Our market economy and the way we think about free markets, it is embodied by something like a stock exchange. So it gets very political very quickly.
Well, on the political side, Congress is concerned that Casin is linked to the Chinese government. And the stock exchange's CEO, John Karen, has said that he cannot publicly identify who owns Casin and that the Chinese government may be a minority stakeholder. This is the case in most large Chinese businesses, and it was supposedly set up by the government in the 1990s to manage the privatization of certain state assets. So, Patrick, is it a legitimate concern that it is a partial government entity?
Yeah, I think it makes sense that they would be concerned about that. I mean, one of the big things that the U.S. government needs to be very careful about is the technology that's developed here in this country to support the economy. It needs to be, it can't just be given out to any other body or institution or organization that may want to use it. And this historically has been a problem, not just with China, but with many countries using U.S. technologies. And so that is everybody knows about that. And so their concern is well-founded. Fortunately, we have a very smart regulatory body in the Department of the Treasury that's going to look at the deal and keep those concerns in mind. And the political element, I think the politicians are actually, for once, doing the right thing. From the business point of view and the regulatory point of view, it's, we're talking about this as if it's a done deal, but it's certainly not. And it may fall through. There's a lot still up in the air.
Well, Patrick, Chinese companies have bought other huge U.S. companies, Smithfield Farms, the largest pork producer, for example, another symbolic buy, the Waldorf Astoria in the U.S. But this is a financial institution. It may be small, but keep in mind that Wall Street central data feeds do link Chicago to the NASDAQ and the New York Stock Exchange, and it's a $22 trillion stock market. Is this a foot into the American capital system symbolically and effectively? And should it be sold to any outside entity, Chinese or otherwise?
Yeah, I think we should. I mean, that's the way that the world economy is moving, right? Barriers are coming down, and there's more and different ways to collaborate as technology evolves. if this deal falls through, I think it's only a matter of time before another exchange is on the table. And by the way, this isn't the first time. A few years ago, it was Deutsche Börse, I think, that was interested in purchasing the New York Stock Exchange.
Well, how much of that is it that it's an American institution being sold, or that it's being sold to a Chinese company? Do you think there's discrimination against Chinese companies here?
I wouldn't call it discrimination. I would call it more of a form of caution, given the fact that it's a very different system and a very different economy with different interests, and there's a great political mismatch there. And in this country, we take the capital markets, they're more than just business. They're part of the culture here. And so in a way, we're sort of opening up our culture to another nation. And that's something, we need to be careful when we do that. But I think if this doesn't go through, by the way, I'd give it 75% chance of going through. If it doesn't go through, it's only
that's a high likelihood. That's a high likelihood,
yeah,
75%.
Sure.
We're going to have to leave it there. Patrick Murphy, thank you so much.